Well, Cathie Wood has a new massive price target out for Tesla, but instead of talking about 2025, in order to expand the valuation and hit the news cycle, Cathie has decided to move out to 2027. Generally, Cathie talks about 5-year visions, and the 5-year vision has always been ending in 2025, but now that a couple years have gone by, it is time to talk about 2027. And Cathie Wood suggests that Tesla's expected value per share is more than 10 times what the share price is today. Tesla's share price today is sitting at $161.92, slightly trending down today. But what do we have here? An expectation of $2,000 per share. $2,000 per share divided by 161.9 puts us at actually a 12.3x from today's pricing. Now, why do they suggest this? What do their models show? And what do we have in the different cases? Well, here we go. ARK has a model, and their model projects the following. An expected value of $2,000. This is their base case scenario. A bear case scenario with a 25% probability that Tesla ends up being worth $1,400 per share. So their bear case, folks, is that Tesla only 8.7x's within the next 4 years. And the bull case is that Tesla ends up being worth $2,500 or a multiple of 15.5x. Now let's understand potentially why. Tesla's prospective robo-taxi business will, according to ARK, be the key driver, contributing to what they believe 58% of the value of the company and 45% of their earnings. That's because they believe that cars will only represent about 62% of the company's revenue at substantially lower margins than robo-taxi network. Now, this is interesting because really you're hitting on that sensitivity here of a lot of people talking Tesla down right now because margins have fallen. They're still phenomenal industry-wide, but they fell below expectations of less than 20% gross margin. So in other words, every $100 that Tesla makes per vehicle, their gross margin has fallen below $20 of gross profit per vehicle. And so I think this is sort of a way to sort of defend and suggest, hey, let the electric vehicles sell at a lower margin. But we actually think in a sort of base case scenario that robotaxi is going to massively drive the value of this company. That robotaxi revenues might only be 25%. But because their margins are going to be so high, they'll represent 45% of the company's actual profits and 58% of the company's value. In other words, they believe at ARK that the car business is only going to be worth 1/4 of the valuation for Tesla. So in other words, if we take $2,000 per share by 2027, Cathie is suggesting that only $560 of the share price will actually be because of the car business. So write that out so you could see it. Of a $2,000 2027 target, you're looking at $560 of that would be because of the cars. Whereas it appears 58% or approximately $1,160 per share will be because of robotaxi. So for example, if you think robotaxi is nonsensical, then maybe your price target is $560 based on Cathie's analysis. Plus, of course, a little bit of revenue for stationary energy, insurance, and human-driven ride hailing. Now, I actually think it's interesting that stationary energy storage is so low here, given the explosion recently in Tesla's storage division. So this would be a question that I have for Brett is, why such nominal forecasts for energy storage? And it's possible that ARK believes that energy storage will be a growth business for Tesla, but nowhere near to the level that robotaxi could end up being, or just really autonomy. So let's see what other inputs and outputs we have here. So in 2027, in a bear case, Tesla believes that, ARK believes that Tesla will sell 10.3 million vehicles. Wow. Whereas in the bull case, ARK believes that Tesla will sell 20.7 billion vehicles. Now, what's remarkable is they've really reduced their average selling prices substantially here. And now this could potentially be a little bit concerning, given that in the last presentation that ARK did, they believed that in 2025, the average selling price per Tesla would actually be $45,000. It appears to me that ARK has revised their models to suggest Tesla is going to sell vehicles a lot less per vehicle than previously thought. However, they're providing substantial revenues because of electric vehicle revenues. We got those. Where is it? Here it is. Autonomous ride-hailing revenue. Now, I think this really assumes that Tesla is going to be able to get to not just full autonomy at a level of 99% satisfaction, but to 100% full autonomy. Because the last thing you want are Teslas using the last hardware set, which is most Teslas, that is hardware 3. The last thing you want are these Teslas being 99% effective, but you still need to have a human driver. Because even Cathie believes that human-driven ride-hailing would be representative of a nominal amount of revenue relative to autonomous. Now, I think that's interesting because Tesla hasn't even indicated any interest yet in getting into human-driven ride-hailing. There is talk about robo-taxi, and there is talk about that next-generation vehicle that could be robo-taxi. But so far, we haven't really heard about that because we're just not at those FSD levels yet. I did notice that in their model, it doesn't appear that they're including FSD revenue, but that's probably because they're baking that into the average selling price. But that actually makes the average selling prices look even worse for these vehicles. So I'm not exactly sure where that FSD is, unless, of course, that's showing up in the ride-hailing segment, which maybe it is. But I think there's a potential flaw in not segmenting out the FSD, so we could see that a little bit more clearly to understand, okay, how much do they actually think these cars are going to sell for, and how much of that could be FSD. Either way, the expectations here about this massive revenue set from autonomous ride-hailing, I don't know what to think about it. Maybe I don't know what to think about it yet because we're in a situation where we haven't yet realized, okay, what does full self-driving without a driver actually look like for Tesla, right? So it's hard to speculate on what this sort of autonomous ride-hailing network could look like when we haven't even gotten to that state of technology yet. Not only at Tesla, but where we have, it's been with a totally different system. If you look at where we have achieved this sort of self-driving, like Waymo, it's a LiDAR-based system. And theirs isn't perfect, but it's pretty good. And in some cases, it drives around without a driver. It's pretty decent. Tesla uses a completely different system. It's vision-based rather than LiDAR-based and more sensor-based. So we haven't actually seen Tesla be able to pull it off yet, with the exception of if you have FSD, you could drive around in your town and go, Tesla can get through most scenarios. And I agree, it could get through 95% of my daily commute on basically full autopilot. But let's take a look at some of the other comments made by ARK here. A recent flurry of progress in AI should accelerate innovation in the autonomous driving industry. In our view, Tesla's vertical integration strategy and Dojo training supercomputers are a key competitive advantage, suggesting that Tesla's plan to expand Dojo by 2 orders of magnitude next year will help the company shorten time between model updates. That's for your FSD model updates. A recent video of FSD software update includes one driver who nearly completes a full ride hail without touching the wheel. The problem is this nearly question, right? When is that nearly going to go away? When are we going to get to without touching the wheel at all? Yes, we know that Tesla has actually now over 150, let's see here, Tesla owned fleet drives more than 120 million miles per day. Right, but and over 1 million miles per day in FSD. We just got information from Elon Musk that we're at 150 miles of FSD, 150 million miles of FSD driven miles, which is fantastic, which is great. Tesla's capital efficiency, of course, the company is one of the most efficient in terms of factory production. We hope that continues that way. And Tesla should be able to grow quickly is the expectation here. They do give us a $6.6 billion contribution to enterprise or to 3% to expected enterprise value in 2027. I actually think that's relatively low. And I think we could see this battery capacity for energy storage really be a bigger percentage of their valuation in the future. But then again, ARK also has the impression, and they may be right, that an electron is an electron, and that really it's not that big of a deal to focus on batteries. You should be focused on where the actual consumer value is, because the consumer doesn't care about the battery. They care about range and function and use. And the reality is they're right about that. Now, here, they quote Elon Musk, or paraphrase him, suggesting that autonomous ride-hailing will probably be the biggest asset value in history. This is very optimistic, assuming that Tesla can pull off their FSD. And I think that's really where we want, see, they even say it themselves, our simulation is highly sensitive to the year in which Tesla launches robotaxis. And I think that all comes down to how great FSD is. Now, Elon Musk suggests FSD could be 100% done by the end of this year. But then again, we've kind of been hearing that for years now. So I think it still remains to be seen when we're actually going to get 100% driverless Tesla. And at that point, yeah, maybe, just maybe, these projections could be right. But if it takes us another 10 years to get to 100% driverless on a vision-based system, these valuations fall apart. And even ARK realizes that's the Achilles heel in this model. In my opinion, it's better to take out any kind of expectations for robotaxis, let that be the icing on the cake, and just look at Tesla as a vehicle provider that also sells software. And for me, those numbers put me well above a $400 price target by 2025. If we get any icing on the cake until or by then, hey, fantastic. And look, I love hearing about these high valuations because obviously I'm a big a fan of Tesla. I'm an investor in Tesla, and I'd love this to happen. I'm just not convinced that we're just ready yet for this. And I do also think that it's interesting here that they suggest in their 5-year investment horizon that the Optimus robot will basically not contribute significantly to Tesla's valuation. In other words, they're projecting no progress on the on the Optimus. So really, ARK is saying the Optimus is their icing on the cake. I'm saying Optimus and Robotaxi is the icing on the cake for me. I'm just gonna look at this as a high margin business that's selling a great product and a great service for their customers, and hopefully that continues. And I agree with Elon Musk that the sunshine comes out in 2024, and overall, I'm pretty bullish. I'm also bullish on hopping over to the course member live stream and reminding you to join me in the course member live streams. Join before 7 p.m. today when we make that massive transition. And folks, we'll see you in the next one. But in the meantime, some pretty cool news there on Tesla, and hopefully you get to participate in this hopeful and explosive growth of Tesla. And this concludes ARK's piece on Tesla. Thanks so much for watching. I gotta run to the course member livestream, and we'll see you in the next one. Goodbye, folks.